Thank you. Well, first and foremost, good afternoon. Thank you for coming along to this event. Open for Business, how the UK can attract foreign investment. I'd like to thank not only yourselves for being here, but also very importantly our sponsors for today, the City of London, who are great supporters of many different think tanks, and in particular of the CPS, and in particular this afternoon's debate about how we make the UK attractive for international investors. We have a fantastic panel. The four speakers or panellists are on my left, Gareth Davis MP, Shadow Exchequer Secretary. Next to him, representing our sponsors, but also very apparent around the city all the time, whether they're sponsoring things or not, Chris Hayward, Policy Chair of the City of London Corporation. Then on his left is Siobhan Haviland, the Director General of the British Chamber of Commerce. And on the far left over there, not necessarily politically, Karim Palant, Director of External Affairs at the BVCA. So Gareth, Chris, Siobhan, Karim, thank you very much indeed. Let's begin by asking each of you in turn to effectively give your snapshot, elevator pitch answer to the question in terms of how we can make the UK be open for business and attractive to international investors.
Do you mean UK or just the City of London?
Well,
that's the big question.
Okay, well, we'll answer the UK or the City of London, if you're asking the question. On my left.
Already getting heckled, you're doing well.
Yeah. Good. I've got my eye on you, it's okay.
You handled it well. You handled it well. Well, first of all, thank you to CPS for setting this up. It is a critical question, but one that you'll be pleased to know, actually doing pretty well on. It's an underappreciated fact that we're third in the world when it comes to foreign direct investment, behind just the Chinese and the United States. Last year we held a global investment summit in government, which was pretty significant for this country because we did show ourselves that we can attract some of the most prominent investment houses. And you know that's bearing fruit with the recent announcements from Blackstone and Amazon, which we helped lay the foundations of in government. But to answer the essay question, first of all, you've got to have an economic environment which is conducive to more business activity. And on this, it's about value, not price. There are plenty of countries around the world which will offer a lower price to potential investors, but we offer value, and that means having a package that is attractive, whether it's on, yes, taxation, but also access to talent, educational institutions, common law, regulatory, a regulatory framework that is competitive but also robust. All of those things matter when it comes to attracting investment. In addition, you have to talk up the country. You have to believe that you're a great place to invest and sell this country proactively in a very competitive global environment, something that perhaps the government could do a better job of doing at the moment. And then more granularly, my experience in the Treasury and in government on this subject, I was responsible for foreign direct investment in the Treasury. We need to have better cross-government, cross-departmental coordination when it comes to engaging the very biggest institutional investors. And that means having somebody who is accountable, but also making sure you bring ministers together with the Office for Investment, who do a great job of a sort of concierge service to investors, of presenting one common message and one single front door. That is something that is absolutely critical. It's a bit technical, but it is absolutely critical. And then finally, having market-based institutions, such as the British Business Bank and UK Infrastructure Bank, who also engage with these institutional investors and other sovereign wealth funds and things like that, to basically put forward our best front foot. So we'll get into it, but it's a positive message, but we can always do more.
Thank you. Chris, over to you.
Thank you very much indeed, and let me say similarly that we're delighted, City of London, to be sponsoring this really important subject here at the Tory Party conference. And you know, the City of London Corporation, we convene and speak for the financial and professional services sector of the United Kingdom, and that's the answer to the first question. This is about the United Kingdom, not about the City of London, I'd like to point out. And we have worked well with the last Conservative government, which has done quite a lot in terms of starting to get the road to growth, economic growth going. The reality is, though, in 15 years they weren't able to convert it into economic growth. That is now the challenge for this government and some subsequent governments. How do we get economic growth? And FDIs are just one part of that jigsaw that we have to face. The government, the last Tory government did a great job with things like the Edinburgh Reforms. They did a great job in terms of the backing the Mansion House Compact, releasing capital. And they did a great job, incidentally, with the Financial Services and Markets Act, which reset our regulatory agenda in a post-Brexit environment. But what we need to do now, in my view, and this is where I'd slightly differ with Gareth, just to get a little bit of controversy going, right, is he says we've done well, we've got a good story to tell. He's right, but he also whispered at the end almost, but we shouldn't whisper it, we should say it. We can do a lot better. And it's how we do a lot better at attracting FDIs, which is, I think, the question that we need to try and answer in this room today. My own view is that when I look around the world at our competitor countries, and if I think of competitor cities, and I think of Singapore, or I think of Ireland, or I think of Paris, they really invest in getting investment in. They have inward investment agencies, for a start, which I think is what we need in the United Kingdom. I think it personally should be at arm's length from government, so it should be public-private sector rather than just public sector. And we talk about a concierge service, but actually I don't believe we really do offer a big enough concierge service in this country to investors. We need to really wrap our arms around investment. And this is all part of global competitiveness, which is, of course, the secondary objective we set the regulators in the Financial Services and Markets Bill. And it's too easy just to slip a clause into an act. The question is, how do we translate global competitiveness with the help of the regulators, who also need to play a role in attracting business into this country? So I think there's some very tangible things that we can do to attract FDIs, and I think it's a big market. And if you may find in this room, or you may not, a little booklet that we've actually produced, this is the little plug, actually scoping out what FDIs could be worth to this country. And if you haven't got one on your chair, I know my team on the way out will give you one. It's a big opportunity as part of economic growth. And I think some of the things I've set out are ways we could go forward.
Thank you. Siobhan.
Thank you. Good afternoon. For those of you who don't know the Chamber Network, we represent the 52 chambers of the UK, covering every region and nation. And a little bit, our best kept secret, the 79 British chambers around the world. So very important for the flow of goods and services out, but of course inward investment in. So just so you know, you have a friend in every port when you travel the world. And I'm delighted to have the president of our City of London chamber right here in the front row. We get everywhere, don't we, Prem? So we have about 80,000 businesses as our members, and our job is to make sure the UK is the best place to start, grow and invest in a business. Barriers to inward investment, I mean, are massively different to domestic investment, really. We need to fix some long-standing issues around infrastructure and drive investment in some of the great infrastructure we're building, such as offshore wind, but we need a lot more of that, which of course goes hand in hand with our planning system. If you talk to a lot of inward investors, which I know we all do, the length of time it takes to get projects off the ground is really a challenge. And all of that, of course, needs to be about skills, having the right people in this country where you invest that can get your project off the ground. Competitive tax environment, I would say, will be a given. We'll probably get into that a bit more. But all of that wrapped in an industrial strategy that gives you and any inward investor real clarity on what we are standing for, or maybe we shouldn't call it an industrial strategy. Maybe we should just call it an economic strategy. What is the economic strategy of this country? I think will be key to allowing us to do that thing we've just all talked about, which is to go out into the world and talk about brand Britain. What does brand Britain stand for? all the great things that we know are here for inward investors and drive that, inward investment from around the world.
Thank you. That sounds good. Karen.
Thank you very much. Whilst this is not historically, for those who know me, my natural habitat, I would query far left, but but yes. Thank you very much for the really interesting discussion I hope we're going to have, for the really interesting contributions we've had so far, and for CPS and City of London for putting on the event. I have some answers to the questions which come from our members, because we did coincidentally ask them this question earlier this year. But I want to start first with the positive, and one of the positives, I represent the BBCA, which is the British Private Equity and Venture Capital Association. We just throw that in, call ourselves the BBCA to throw people off the scent. But we're the representative body for private equity and venture capital investors in the UK, which is we represent about 600 firms, but of which 300 to 350 are the sort of investor firms, the people that do the private equity and venture capital investing. And the positive is to say that those investors raise money from around the world. So they are funds, closed-ended funds generally, that invest over a 10-year period directly in businesses, but they do so using capital that they've raised around the world from institutional investors, of which about 85% comes from around the world. So already we are bringing capital to the UK to invest in our funds, and at the other end, the businesses that those funds invest in, around 50% of them, or around 50% of the investment, goes into UK businesses. So as a means of getting capital from around the world into UK businesses, whether it be fast-growing stakes in fast-growing businesses, or in acquiring sort of more mature businesses that need a boost and often a productivity boost, as the evidence shows, we think we're a really valuable part of that solution, and we're really pleased to be here for that reason. And to your point, if you are a UK-led investor, so if the investment in the UK firm is being made from a UK firm, it is twice as likely to be outside of London and the South East if the decision is made here in the UK as to where to invest, than if it is an investor investing maybe even in a UK firm but from outside of the UK. So if we're trying to get growth around the country, that's a really important part of it, even if they're London-based investors. And I said I had some answers to the question. I won't go into huge depth here because I'm sure we'll get it into the discussion. But the first thing, again, to start with the positive, only 3% of our members, when we asked them is the UK harder or easier to invest in than the rest of the world, only 3% of them said the UK is harder than the rest of the world, and 35% said it was easier to invest in the UK than the rest of the world. What's interesting is that whilst the numbers were also positive on the investable propositions, 11% said actually there are fewer investable propositions in the UK, and only 24% said there were more. So actually what we find is the gap narrows when you're talking about investable propositions. And some of the drivers behind that, infrastructure, you mentioned, skills, you mentioned, energy, and so on. So I think great to get into those discussion, the detail in the discussion as we go, but those are some of the sort of challenges that people face.
Well, thank you. That was a very good set of introductory comments. Maybe if I could follow up on one key theme that you've touched on that we need to go into more detail, the role of finance. So Gareth mentioned the metrics are pretty impressive for the UK. And then Chris talked about the changing competition, mentioning a host of centres, some closer to home, others well away from the UK. And then we basically heard the international dimension come out from Siobhan and Karim. But when one looks at the UK's strengths, one of the clear strengths is, notwithstanding the gentleman in the second row, is the City of London. And when one goes to many events, indeed in the last 24 hours here at Party Conference, finance gaps has been an underlying theme. It's not only about attracting the money, it's about keeping the investment here once it's here, and indeed growing the companies so the finance continues to sort of invest in the UK. So given that the City of London is so internationally competitive and is the core strength we have relative to anywhere else in the world, given that one of the key things you should always do is play to your strengths, what more should we be expecting of, or can we do with the City of London so that plays an even bigger part in answering this question? Obviously, let's start with you, because every time I listen to you, I keep thinking, how did the Tories lose? Because it's just the succession of success stories, not putting you on the spot. But what's amazing is how many good things were done in the last 14 years. There's lots of things could have been done better. But actually, there's been many strengths on the economic side. So it's, in some respects, we're building on some success here.
And it wasn't all just while I was in the Treasury.
Yeah, very good.
Clarifying that point. Look, you're right, and I think to try and answer the heckler earlier, 2/3 of jobs in financial services are outside of London, right? And that's not always appreciated. And so the benefits to having a really strong financial services sector are felt in all parts of the country. I was at HSBC just the other night, and they have their commercial banking headquarters here in Birmingham. And so I think, first of all, you've got to recognise that. If you look at our global competitiveness, more US dollars are traded every day in this country than there are in the United States. We're a leader when it comes to derivatives trading. If you put the US and UK together, we are the global market when it comes to asset management, for example. And so, yes, you have a lot of strengths, but at the same time, we're not really tapping into the world's second largest pension fund market. Our pension funds are not investing to the degree that perhaps some pensioners would like them to in this country or in growth companies, in venture capital, private equity, or in life sciences and other sectors that are at the forefront of growth of this country. And that's why in government we started on this journey, and I think the Labour Party intend to take this forward rightly, which is to try and unlock those assets. But to just unlock them, presents a danger that those assets then go elsewhere. And so you need to work with the City of London, with financial services, to ensure that you marry the two together, and we can get into this. But I think that is a key challenge for our country, which is making sure that the institutional pools of capital, the pension fund assets and insurance assets, are investing first and foremost in this country and then in the growth companies of the future.
Thank you. Maybe the other speakers could follow up on that, because it's been put forward so much by the government now, it's easy to maybe make this institutional change, and hey presto, pension funds and insurance companies are going to invest in the UK and it's all going to be in the green sector. You speak to people in the city, they say we have a fiduciary responsibility to our shareholders, and as Karen touched on at the end, maybe the investment opportunities aren't that great. But are we on the right track on this front? But a whole host of issues there, but the role of the city, should we be doing more?
Well, yeah, look, I think we can always do more. I think that we have a challenge. We've got to make sure that when we're trying to attract investment in, we're not letting it go out the other end effectively. And if I give an example, a specific example about that. So if we take fintech, right, we are one of the most successful countries, and not just in the City of London, across the United Kingdom, for fintech startups. But we're not able to scale up. And the reason we're not scaling up is because the investment isn't going in here. So those companies that should be listing on the London Stock Exchange are crossing the pond to the US. They're listing on NASDAQ because they can get 2.5 times the valuation in the US. Now, that is our wealth slipping out the back door, if I can put it that way. So we need to find a way to actually ensure that those businesses, they don't just start here, they grow here and they stay here. And that's just a specific challenge I could offer. But overall, I do think we constantly need to do more to ensure that the city is driving that growth. We need government to help us, and we need the regulators to help us. And one of the big debates that we're having at the moment, and I think this is a bit of an elephant in the room word, but I'll throw it out there, is just what is our appetite in our country today for risk. Now, risk is a word which has almost been driven out of talking about the economy since the financial crash, to be fair, and one understands how and why that's happened. But I would put it to this gathering that you will not stimulate economic growth unless you have a proportionate response and appetite to risk. Risk is something that happens in everyday life. Businesses fail as well as succeed. And we don't, in my view, in this country, culturally, encourage entrepreneurs who, when they fail, should be supported, picked up, as they are in the US, and driven forward again. So this is a cultural change I'm talking about in our country. And I think we need to say to the regulators and work with the regulators to stimulate competitiveness and economic growth, not to suppress it.
Thank you. Siobhan, when you look at things from your perspective, are these financial people in the city doing enough to help UK business? And are they doing enough to make the UK even more attractive? And as Chris touched on, it's not only making it more attractive, it's actually staying ahead of the game, so to speak, in the face of competition.
I mean, Chris did a great job of outlining what we need to see. If you think about access to finance for new businesses in this country, you know, we have great things like SEIS and EIS, so tax breaks for angel investment. We have the British Business Bank, which is a vehicle for getting money out into the system. I think it could work better. I don't think it's possibly well enough financed nor well enough known. There are other vehicles other developed countries use, like CDFIs or regional banks, for example, that we might want to see more of. But on the pension reform piece, I think we as, our members of all sizes and sectors, it's really exciting. It's really exciting. But as you pointed out, we can do the reforms and the money has to flow. And we want it to flow into the real economy. We want it to flow to businesses all around the country. And I don't know, well, Chris might correct me, if we've got the mechanisms in place to do that yet. And I think that is going to be, it's like, isn't it, great idea, but the devil's in the implementation of the thing. So I think those are really important from getting it into the SMEs of the UK, the growth businesses of the UK. But on the flip side of that, if you think about big investment in infrastructure, so if the money can go into Lower Thames Crossing, Sizewell C, the supply chains around those places, you have a hugely positive effect on local economies, 4 times multiplier effect for most. If you've been to Hinckley to see the area there around the nuclear power station, they've taken those jobs, they've taken those skills over to Sizewell. They're really, really successful. If we can get more private money into those big infrastructure projects, again, Celtic Sea, offshore wind, and build supply chains on land, by the way, which we haven't done in the North East yet, we can really see local economies thrive.
Okay. You're welcome to come in here, Karen, but maybe both you and Siobhan, you keep talking about the rest of the country. The rest of the country is pretty important. I was in the last session in Silicon Valley in the UK, and it was pointed out by one of the panelists, quite frankly, it takes as long to go across Silicon Valley as it does from London to the north of England. We often think Britain is a big country, but international perspective, it's pretty small. I'm in China next week. I tell you, when they talk about the UK, they talk about London, basically. London, London, London. Is levelling up a case of actually undermining London, or should we be actually boosting London more and actually hoping everyone spills off London? When you talk about regional aspects, when you go overseas, people very much are focused, it seems to me, on London and the South East. Or is that an unfair? How do we make the rest of the UK more attractive for people to put their money into?
London is a gateway, right, isn't it?
Yeah.
London's a gateway. Heathrow is the gateway mainly into the country, and we have good connectivity to the rest of the country. We need to ensure we've got good connectivity. But also, Doncaster, right? How long does it take on the train from London to Doncaster?
2 hours. 3 hours.
An hour and 15 minutes. You see, people don't know that. They think it takes 3 hours. We can get around the country. We have a chamber network that can welcome in with investors and show them around those places, meet all the right stakeholders, meet the community. So we have the structures in place. We just need to push them a bit harder.
And is that your feeling, Karen?
Yeah, I mentioned before that it's, about 2/3 of the investments made in the UK by our members by UK-led private capital funds are in businesses outside of London and the South East. There are overall private equity venture capital investment is skewed towards London, but a lot of that is people making investments from outside the UK. Well, if you're in the UK, it's an hour and 15 minutes to Doncaster. If there's an investable proposition in Doncaster, you're going to go, and that's what we find. And that's a great story, and it's really, really, really important for the UK to understand that having London there is a huge opportunity for our for the economy as a whole and for the country as a whole. We think there's about 140,000 people that work in the kind of private equity venture capital ecosystem. So we think there's about, if you take, but maybe it's about 1 in 10 of those directly work for PE and VC firms. The rest work in professional services, financial services, legal services, etc., accountancy, and they are all over the country. And they're looking and valuing deals, they're consulting for portfolio companies, they're doing on-the-ground stuff. And yes, it's financial services, but actually it's improving the productivity of real-world businesses. And productivity is a massive challenge for the UK. So I would say, leveling, the idea of sort of levelling up being about rebalancing between London and the rest of the country is sort of it's a bit of a false choice. Actually, what you want to do is drive productivity and investment in the UK, full stop, and it will happen.
Chris, did you want to
come? Look, I absolutely agree with that last point. For me, obviously, I would see the City of London and the financial centre, financial capital, as being the engine room. But when we talk about growth, it has to be inclusive growth. And inclusive growth is when it's spread across the United Kingdom. And I do think there are two factors, and they've been touched on by other panellists, but let me just say them again. One is confidence. Confidence is really, really important. And I think it was Siobhan or somebody who made the point that we need to talk up our country. Now, I've got to be honest.
Gareth touched on it.
Gareth, I do apologise, Gareth. But I didn't hear that last week when I was at the Labour Party conference. I didn't hear it in the Rose Garden speech from Keir Starmer. I heard everything that's wrong. But what about the confidence? What about the boost to our country that we need to talk about? Well, exactly. I think things can only get better. But there you go. That's a difference.
It's such an important
my view and their view.
Yeah.
But the other point, which this is the one Siobhan touched on, is around planning and getting business done. Right? If it's going to take you ages to connect to the grid, if it's going to take you ages to get a planning application through, and to be honest, no governments have solved that challenge in recent years. They've all talked about it, but none of them have solved it. So it'll be interesting to see whether this government actually does translate that into action.
Because planning reform actually has been cited by the government and it's been talked about a lot recently. So is planning reform essential to actually making the UK more attractive? Is that how you all feel on this panel? There's a number of different things that if you're making an investment into a business and you're saying I can see the growth path for that business, there are a number of different things that are going to make you think actually it's going to be too slow. Actually, I'm not. My capital will be better deployed elsewhere. And planning is a massive part of that. We think about 70% of our members have said that is an issue in the UK. About a third have not gone forward with an investment in the UK because of they were concerned about the planning, the planning issue. But similarly, speed and clarity of regulatory decisions. So not just planning, which is effectively a regulatory decision, but what's the likely competition outcome from this deal? If I go into this deal, am I going to be tied up for years, etc.? Or whether it be financial services on the financial services side, if you're investing in fintech and so on, that whole area, and I think it's been bound up with. We've been building a sort of post-Brexit regulatory environment. We've had a lot of economic disruption, etc., etc., etc. So a lot of that has been bound up in that process, and I think we need to quite quickly clarify a lot of that stuff and just have a real vision for how we as the UK are going to regulate these things. So Gareth, your backbenchers and NIMBYs actually prevented one of the big advantages the UK could have had by actually stopping planning reform.
I always felt that day to day in Treasury, I had 99 problems that are all literally about planning, and it is definitely what international investors observe about our country, that it's hard to sort of make progress, and this is a cost to business. Of course, it is the longer that decisions are made, either by a regulator or by a local authority, that is a daily cost to the business and an opportunity cost as well. They could go other places. But as you allude to, it's not without its challenges when trying to ensure that you bring communities with you. And if you don't bring communities with you, that can be a bigger problem, quite frankly. And so I always thought on energy, we should be talking about it more in terms of national security. The fact that some energy projects can't connect to the grid for 14 years, can't get planning, even though it would be transformational to our energy production and security, I thought that was a bit of a missed opportunity. And so I think part of it is framing. There's a piece of work to be done, I think, on community benefits, but an appreciation that we do need to have a helicopter view of where some of these projects and proposed developments go. There isn't much of a strategic helicopter view at the moment as to where things go, and you end up getting a clustering. I mentioned on another panel in this room the other day about Lincolnshire, where I come from and represent. We're just inundated with applications for solar development, and there's no spatial planning. There's no helicopter view. It's one of the things we were looking at in government, but never went for it in the end, unfortunately.
Let me come back to something that was raised, or some comments raised in the opening comments. Both you, Gareth, and Chris touched on concierge service, and Siobhan mentioned tax. About 3 years ago, the Centre for Policy Studies, sponsored by Shore Capital, did the biggest survey of investors in the UK to gather their views, and over 100 people were consulted. And two of the big things they said very much tallied with what you guys said at the beginning. One of the key takeaways was that international investors said that they wanted to know who they should be able to talk to about growing their business in the UK. And the second was to overhaul the tax regime so that it could become more investment friendly. Many people in the room might not be aware of what people mean by concierge service and what we can actually do and whether it actually really makes a difference. But maybe whether it's on that or on the tax regime, if we could sort of take answer. Karen, you've got your hand up first, but
yeah, I mean, I actually had a very good discussion last week at the conference, which shall not be named, with one of the new Treasury ministers, with a number of our members, who essentially explained the difference between their experience in France and their experience in the UK. And explained the different, what does a concierge service mean? It means essentially, if you have a potential investment in Lincolnshire that's potentially not a solar farm, and you want to make it happen, and frankly, you're not an expert in local government planning, and you're not an expert in the Financial Conduct Authority's kind of approach to that particular risk profile, or you're not an expert in whether it's DEFRA or DCIT or whoever that you need to be speaking to, that there is somebody there who's going to be, and in their words, rolling out the red carpet and saying, right, you're not going to have to become an expert in how the UK government works in order to invest in our country. We're the experts in that, and we will help you do it. And it doesn't mean that you're going to kind of change this. Well, I mean, potentially in certain circumstances, if it's in the national interest to do it, you might think about kind of how you might reconfigure the way the rules apply in a particular case to help make an investment happen. But more, it's as much about making sure that people know in advance what those bumps in the road are going to be and how to fix them. And there was some international investors who were very eloquent on that point. And encouragingly, there was a sense that the Office for Investment was doing a decent job, and there was a sense from the government side that they wanted to build on that and they wanted to go further. And I think that would be really, really positive.
Chris.
Could I just pick up on the taxation point, because that was the other point you made. Look, I think the government has got to set a long-term strategy for a competitive global business taxation system. Now, they can't do that on day one, I absolutely understand that, but they need to give that pointer and that confidence to global investors that we're going to have a tax system that is competitive with the rest of the world.
Some question whether they actually want to.
Well, no, I think it's fundamental. I think it's part, again, of attracting business. When we go into this Global Investment Summit to sell UK PLC, I think the first thing investors will say is, okay, fine, we get the pitch, but what about the taxation? What about the tax system? And if you can't tell them what that is and you can't point to a direction of travel, then I think you've got a problem. So I think on taxation, we need to look at taxation from a business perspective, not just from a UK taxation perspective, but from how it compares with the rest of the world.
On taxation, and Siobhan, you would probably have views on this, is it the actual level or is it the predictability and simplicity of tax? Sometimes we get het up about rates of tax, but Singapore, for instance, the great thing it says about attracting investment is that people know the tax rate they will pay over the next 30 years, which people in the UK would think, goodness, and they actually believe that.
I think it is that point. I think it is continuity and stability.
I believe the new government are looking at a tax roadmap they've committed to one term and then looking for a longer tax roadmap, which is absolutely welcome. And actually, you know, we have been saying for quite some time, business rates is a real drag on our thriving high streets and our local places, and it needs total reform to really see those. You know, if you want to open, we had a fantastic business selling chocolate online. She wanted to open a shop on the high street. She's got to sell 10 grand's worth of chocolate before she even makes a penny. And then, so she just said, I'm not going to do it. So, you know, we need those changes, and it's a very old system, and it needs massively modernised.
When you were in government, what was your experience in terms of what businesses wanted in terms of this concierge?
So first and foremost, you know, large businesses, large institutional investors did not mention tax. It was about stability of policy, an environment in the country where there was political stability and certainty for planning purposes, in terms of not community planning purposes, but for corporate planning purposes. The second thing would be about taxation, but within that, it was more nuanced. It wasn't the rate of taxation or the headline rate of taxation that people brought up, it was the effective rate of taxation. It's why, for example, this organisation, Make UK, the CBI, all called for full expensing to be able to enable certain corporations to, you know, not pay corporation tax if they reinvested profits, for example. But I think on reflection, sometimes simplicity of messaging, simplicity of the headline rate goes a lot further than perhaps we appreciated in office. And while I don't think you know, the move to 19% corporation tax stimulated as much investment as perhaps some people think, it did send a message that we were open for business, and that in itself was an attractive factor when discussing with businesses who want to move here.
Okay. Just in terms of the concierge service itself, France was mentioned. Are there international best practices elsewhere? One would tend to have thought the UK was already up there, but it's just that others are now changing things so dramatically.
Well, let me give you one very specific example, and it is, funnily enough, Paris, and it's the way that Macron operates in terms of bringing investment into Paris. I mean, we have the Davos summit once a year. President Macron, I have it on good record, actually encourages prospective investors to stop by in Paris en route and rolls out the red carpet for them in Paris. Now, why don't we do that in the United Kingdom? It's not that difficult. But, you know, that's the sort of thing where, you know, the head of state is inviting you to come and to talk about investing in Paris. We could do that. We've got a better proposition than Paris, I'd argue. But we need to actually do that.
In terms of communication, when one goes across the globe, it's not just the message, it's the messenger that is the issue. And if I sit in another part of the world, I pick up Bloomberg, Financial Times, BBC, it's often very critical of here in the UK. Are we getting the right message out there? Maybe we shouldn't be shooting the messenger, of course, but how can we get that narrative so it sounds far better elsewhere? Because if I'm elsewhere and I look at all the debate about listings, without knowing the detail, it just propels US up and the UK seems to be pulled out. Is it? Sorry.
I think that point about the message and the messenger, I think, is quite key. So I was working in a large US firm at the time of the Brexit referendum, and I'm a patriotic Brit. I'm based in London. I want my company that I'm working for to invest here in the UK. And I was working there for quite a long time after the referendum. And what we had was, we had senior people at the company reading New York Times, reading the Financial Times, reading those sort of global papers, and getting a kind of a sense of, well, you know, this has happened, lots of disruption in the UK, and it was sort of our job as the Brits in the company to say, well, actually, this is where the UK is going. This is where it's going. And I think if we're talking about sort of things like, you know, open for business, 19% tax rate, those kind of things, that kind of messaging, very simple messaging that says this is what the UK is for, this is what we're good at, this is, you know, enables a kind of army of people in those companies to be sending that message. internally, an army of people, if the chambers all around the world to be selling that message and so on. And I think that's the thing that I think the UK has had at times in the past, and can easily have again. But it's just I think for all kinds of reasons we haven't necessarily had that.
Does anyone else want to come in on that?
I will tell you, we've got a pretty extensive diplomatic network that's not always appreciated, and I certainly didn't appreciate it. But some of our trade commissioners are some of the best in the business, quite frankly, internationally, particularly our guy in Asia Pacific, who I did a lot of work with on Singapore and Korea. And but to Karen's point, they need the playbook, right? They need the clear messaging as to what is it that we're
So it's how they're incentivised on the messaging. They need to be told what.
It's the manual that they take with them.
Okay, fair enough.
But it needs to be led from the top.
Yeah.
The difference
top
between
down, yeah.
us, I think, sometimes, and Emmanuel Macron, who has done a very good job, I have to say, annoyingly, with Choose France, which is what the Global Investment Summit was based on. It's true what you're saying. Time and time again, I would meet with CEOs of big banks or whoever, who had just come from lunch with Emmanuel Macron in the Élysée Palace. And so, setting that tone from the top, making time for these business leaders, I think does definitely go a long way. But the last thing I would just point out on this is that, in this country, we have the value for money framework in the Treasury, where if you spend taxpayer money, there's a framework and there's a process that you go through to make sure it's well spent and not wasted, frankly, and as simply as that. But you don't have typically the flexibility to get deals over the line. And sometimes when you're dealing with a Blackstone or an Amazon or a big company, there is something in the system that you just need to unblock, or a financial incentive that you need to provide on a bespoke basis. And that's what France also does very well. It's why, again, in office, I introduced the Investment Opportunity Fund, which nobody talked about, nobody knew about, but I was really excited about it because it's 150 million, which in the big scheme of things is not a lot, but it was a specific pot that didn't have to go through the normal process and could be deployed very quickly to get deals over the line. The first act, I'm afraid, of Rachel Reeves was to scrap that opportunity fund. And I think in office, they will realise that it's things like that don't make the headlines, nobody really talks about it or knows about it, but that's the kind of thing that can get these big deals over the line that France does very well.
Okay.
The other thing that would just be helpful, if I could just say,
Yeah.
and I said this to the Labour Party last weekend, is they actually need to appoint an investment minister. They haven't done so yet. Now, this party had Dominic Johnson banging the drum for the United Kingdom. Labour need to appoint an investment minister. It's not just about having an inward investment agency. You need a politician front of house as well. So far, we haven't got an investment minister.
Yeah, very much.
And probably more than one. But that coherent message, by the way, we do have an incredible diplomatic system, and they're talking about economic diplomacy. That's delightful. That coherent message is our industrial strategy. That's what everyone needs to have in their hands when they go around the world.
But aren't you worried that industrial strategies are expensive, intrusive, and
No.
No?
I think they
Because the
are.
International
they set a
Monetary
direction.
Fund is okay.
Yeah, and if you're an international investor, you can look at it and say, okay, I see where this country's going. I see where they're putting their money where their mouth is. I'm behind that.
When one looks from overseas, how do the different industry groups appear? Because each of them independently has lots going for it. Federation of Small Business, CBI, IOD, and the Chamber of Commerce. How do they cooperate as well as compete? And are you all doing the right thing together? If I can put you on the spot there.
I've never been asked that before. So the Chambers are the only business organisation that's international. We're the only ones that have, obviously, offices in 79 countries around the world. And the five of us represent different sectors of the economy. That's right. We obviously represent everything from the largest FTSE startup in every sector. So everyone has something different to offer. We have a smaller organisation in the centre of London, but there are 1,200 people in chambers around the country on the ground talking to businesses every day. So actually, we did talk to Lord Offord previously about using that network for inward investors to come to those places and understand sort of the local environment and how you can invest in that, and that we will continue to do.
Very good. We've got 15 minutes. Let's have some Q&A, please. Who's got their hands up? Lady, is that lady or gentleman there on the fourth row? Okay. We'll come to the front row in a sec.
Hello. I was wondering, I am 18, so I will give pre-warning if it does sound a bit dumb. But I was wondering about the future of private equity inside of the UK economy, since it's a special thing within the UK that private equity firms has gobbled up a lot of our FTSE and FTSE 250. And it's came up to a point where they squeeze these companies so tight that once they drop them, they eventually collapse later on. And it's became dangerous for this economy and for worldwide in the future if they grow and continue on. So I was wondering, how would you find the solution for that?
Okay, let's just take another question at the same time. That's a really good question. Lady on the back row, standing up.
Hi, my question was just a follow-on to communication and kind of the messenger versus the message. How do we combat what feels like a self-sabotage from the Labour government about the state of the UK economy? So, for example, saying that there's gaping holes and, you know, this might not necessarily be the best place to invest because we've got all of these things going wrong within what the previous government has left it. So, whilst you can have a coherent message that you guys are putting out there, how do we then combat the fact that our very own government is kind of telling the world that this is a state?
Very good. Two questions, either answer one or both, or you don't have to either. But private equity, very good question indeed, thank you, and very pertinent point for the lady at the back about comms.
Can I just come back on the very good question on private equity? Because I think, you know, if I represent private equity investors as well as venture capital investors, and I think and there are no, you know, there are no dumb questions. And when we're investing in businesses backed by 2.2 million, which back 2.2 million jobs, 6% of GDP, 10% of private sector GDP.
Sorry, what's the 6%?
That's private capital.
Okay.
6% of GDP comes from private equity and venture capital backed companies. It's entirely right that there is kind of criticism and scrutiny and that people will kind of hold us to account on things. I would say that there are some high profile examples of businesses that have struggled. There was a panel last week where someone was accusing private equity of closing Woolworths, for example, and that Woolworths had been taken out by, you know, a high profile retail business that had been taken out by private equity. Was never owned by private equity. And in fact, you know, that's quite common. And
but the generic point is that private equity gobbles it in and spits it out.
Yeah, and
we should go from 6 to 8 or 8 to 10%.
Well, so the reality is that you know, you can only really assess these things, and there are high-profile cases of businesses that fail in retail or elsewhere that are listed, that are owned by other entrepreneurs, and that are private equity owned, and that can happen. But if you look at the overall picture, when you know, academics have looked at this, the Productivity Institute have looked at this, actually what private equity does is it drives growth, it drives productivity in businesses. And productivity has increased in private equity owned businesses in the UK. That data has shown that. It shows it very, very extensively in the US. And it does so through a number of different things. First of all, many small and medium-sized businesses or businesses don't have a business plan. Private equity owners will come in and they'll put a business plan in place. They'll come in and they'll bring in tech adoption. They'll invest in growing in that business. They typically own a business on average for about 6 years, and they typically will only make a return if they grow that business to a larger business that is worth more than they bought it for.
So is this how you?
It's a great. By the way, it's a great question.
Yeah.
Right, and it's not asked enough actually, and I'm grateful for the opportunity to address this. Private equity have become the new banks. It's very easy to bash them, but it's absolutely right what Karen was saying. What you're talking about is asset stripping, which happened in the 80s and others, where, you know, they would buy companies and sell off the parts and make money out of that. That is not possible anymore. There aren't opportunities like that, even if people wanted to do that. Private equity companies make money now for their investors over a long period of time by growing those companies. And there are a number of businesses in this country that would not be alive today, nor the jobs, by the way, if it wasn't for private equity companies taking them on. The other part of this is that you know, they are a significant part of our economy. and they provide not just tax revenue, but they bring in some of the best and the brightest people to our country. And we need to sort of change the narrative, because in every MP's constituency there will be businesses that the BVCA can point to where private equity has supported them, have owned them, and have grown them. But one of the reasons why you've had this rise in private equity over the years is because we've almost gone a little bit too far in the requirements of publicly owned companies when it comes to quarterly earnings and quarterly reporting, which no good business would act quarter by quarter. They should be acting over the long term. The onerous regulation, the rise of ESG regulation in particular, and the transparency and, frankly, some of the more aggressive attacks that public companies face, a lot of firms now who want to go private so that they don't have that frank distraction. And we have to be mindful of that.
Just to pick up quickly on the comms point and the comms question for the lady at the back. Look, I think I'm well placed probably to answer this, because City of London Corporation politicians, of which there are, believe it or not, 125 of them to govern a tiny square mile. Don't ask me about that. That's a historical thing. Primarily all sit as independents. And so if I'm absolutely honest, now sitting as I do as an independent, having had 30 years in party politics, I actually think this happens always when you change government. If we're honest, politicians always rubbish the other side. It's part of what we do, right? It's kind of, you pass the message back that, we're in this mess because the previous government left us with a gaping hole. I've seen this over changes of governments time and time again. You can get away with that in the honeymoon period, right? But you can't get away with it beyond the honeymoon period, because when you're in government, you're in charge. It's your responsibility. And I think the public really won't buy for too long this messaging that it was all the other side's fault. And actually, I think Jeremy Hunt and others have been evidencing what they did hand over to this government, and it isn't quite the way the government portray it. But I mustn't say any more because I mustn't get into party politics. But there you go.
Yep. Let's take some more questions. First row. We'll take three together, just because there's a few hands.
Thank you. I run a podcast called Charles Kelly Money Tips Podcast, and I've recently written an episode.
It's called what?
Charles Kelly Money Tips Podcast. It's on
Money
YouTube.
Tips Podcast, okay.
Yeah, I recently did an episode on the fact that 500,000 millionaires are estimated to be leaving the UK, according to a Swiss bank report. And this is not just because of the Labour government rubbishing the country or saying Britain is broken. This comes about from maybe a year ago when the tax rates went up to double. Corporation tax, double what Dublin is. So a lot of people are leaving the UK, entrepreneurs, and anecdotally we hear about this, and they're going to places where they're welcomed for lower tax and easier for business and friendly to business. So what does the panel think about that? I was also planning...
let's just take that, thank you. Guy behind you, and then we'll take gentleman over there.
How would you feel if the Labour Party raided people's pension funds, say borrowed against people's pension funds, to roll the pitch or to do all your asks so that private business could make larger profits?
Okay, very good. And the gentleman there, guy with glasses.
Thank you. Good morning, panel. My name's Will Graham from a consultancy called Luther Pendragon. I'm interested in the panel's views on the FCA's proposals around naming and shaming firms under investigation as a possible deterrent to those foreign investors looking to invest in the UK. And then also, if I may... Yeah,
let's take it at that, because that's a good question. So three good questions. Who wants to go first? 1, 2 or 3?
I'll take the first one. So I think that tax is only one reason that people invest in the UK or start a business. I don't think that people think, I really want to start a business, but I'm going to have to pay 30% capital gains tax in 30 years instead of 20. I think there's a huge other number of reasons that people come here for the environment, for the culture, for all the education, all the good things we know. But having said that, we need to get our story better. So there has been, a lot of chipping away, like visa challenges, international students, tax-free shopping, leaving the UK. We need to get better at a coherent story of why it is a great... And we need to back ourselves. It is a great country, it's a great place to live, and we need to back ourselves to do that.
Very good. So, yeah, thank you. Yeah. So, and the second and third question. Second question is almost not just about financial pension funds. It's about intrusion, really sort of public sector intrusion. And the third question about naming and shaming.
Well, I mean, on the second one, I wouldn't be at all happy to see any pension fund raided to roll the pitch, as you kind of put it. I don't think when we talk about something like the Mansion House Compact, which is 5% of DC pensions actually going into a fund to invest in high-growth British businesses, is doing that. I think if you actually look at what's been happening with our pension funds in this country, unlike I would say Canada and Australia, for example, our long-term savers have been missing out because there's been such a focus on cost and not enough focus on long-term returns. And again, it comes back to this risk area. You know, people put their money into pensions to save for their retirement. They've got to have confidence that they're going to get a better return, I would argue, than they're getting at the present time. And just on the name and shame, I fundamentally disagree with it.
Yeah. In fact, the name and shame, it's a sign. The regulatory pendulum before 2008 was at one extreme almost, self-regulation. And that pendulum has just gone so far over the other side. Like a pendulum, it needs to settle in the middle. And you're against it, presumably, because those people against it feel that it will encourage the wrong type of behaviour, shall we say. It would deter people from doing things.
That's what I think, personally.
Yeah, we were amongst the number of organisations that expressed concern on that naming and shaming piece, and I think there was concern, I think, within government as well about it, and I think more widely. I think that hopefully that a sensible outcome will prevail. Just wanted to come back on the pensions thing, which is that it's really, really important, and it's very hard when discussing the issue of pensions for it not to look like people want to take people's pensions and do something with it. And I think that's a really, really important thing here. I, as a pension saver in a DC pension scheme, really, when you look at it, I really want my money to go into active ownership of businesses, to grow those businesses, because I want to retire with a better retirement than I otherwise would do. And that has to be the test for any reform of the pension system. Is it going to mean a better retirement for me as a pension saver? And that's where we, as the BBCA, representing private equity and venture capital, are very committed to reforming the pensions market so that the people investing mine and your pensions on our behalves can rationally take the kind of diversified, balanced approach to risk that means that I'm going to get the best possible return for me in my retirement. And the net effect will be more active growth in our economy because more capital will flow to the right kind of businesses. But that is an effect rather than the driving cause.
Okay, we've got just over 4 minutes left. I'm going to ask each of the speakers to finish with 45 seconds of their key message. And just as they think about that, I'm just going to plug the next panel, which is on the great energy debate at 1:50 in this room with Rhys Mogg, Neil Record, Dylan Smith and Emma Revels, and encourage you to buy a copy of The Conservative Revolution and keep in touch with CapEx and CPS, etc., when you leave. But we're going to finish now. If we go down the panel, 45 seconds, your key message to make Britain attractive, whether it's regulation, whether it's concierge service, the one key thing you would like the audience to take away. And let's keep it tight. One thing each, please.
So I think on regulation, concierge service, what they all have in common is clear political direction of travel and a clear sense of where you want to take the country and the economy. So I think that's really vital. Second of all is an openness to international investors and building an asset management ecosystem here in the UK that continues to be world leading.
So clear vision and open to international investors. Siobhan.
Yeah, we all know we need economic growth. That is domestic, but it's also going to be international. We need that playbook. We need that economic strategy, and then we need to get it into the hands of the UK businesses, of our great civil service and our government, and go out and sell it.
Chris.
Open, innovative economy, absolutely agree with that. But personally, I also think everybody in this country needs to talk up how great this country is, what the opportunity is for this country, why people should invest here. Let's start with building confidence.
Excellent.
Reframe the way we talk about the whole thing away from individual policies and price, and talk about the value and the package that we offer individuals and businesses get that message nailed and have everybody deliver it.
Thank you very much to our sponsor, City of London. Thank you very much to our 4 fantastic panellists. Thank you very much to all of you for coming. And let's finish with a round of applause for all the great ideas. Thank you.